Friends, welcome to our special pre-budget series, What the World Wants from India. The Indian budget has always been special, both for foreign investors and domestic investors, as a reflector of the reform initiatives of the government, not just in the budget, but what its initiatives are for the year, and indeed for its entire term. The current budget comes on the heels of demonetisation, so there are even more hopes and expectations about some fillip for consumption and for investment. Today I have with me two big investors, or two big India watchers. I have Adrian Lim, the Senior Investment Manager at Aberdeen Asset Management. After the chat with Adrian, we will also be speaking with Maasry, who is the head portfolio strategy for emerging markets at Goldman Sachs. But first, let me welcome Adrian Lim to the show. Adrian, of course, has been watching India for over a decade and a half and manages about $10 billion in assets across several Aberdeen funds. Adrian, thank you very much for joining us in this show today. Well, first up, what's your view of India coming as it does after demonetisation? Do you think it has jarred the India story for the near term? Just what is its impact on Indian equities?
I think the demonetisation exercise was an interesting exercise. I think, if you ask most economists and most watchers of the Indian market, not just the economics but the social side, what it's trying to achieve is actually pretty good over the long term. The issue and the main challenge is that there are not many precedents for something like this, and execution is pretty important. It's also important to keep quiet about it, so the amount of plans that can be made ahead of the execution of an exercise like this is quite constrained as well. I think the short-term and the near-term pain has been quite acute, and if you look at the economic indicators, not all of the impact, both negative and positive, are measurable just yet. So we still continue to monitor the situation, but the end objective is a good one, and I think that's something that the government should be applauded on. But they need to make this work, and at the moment there's still quite a bit of pain.
Okay, so at the moment, as a long-term India investor, has it altered your view of the India story, or has it altered your view of any of the sectors? If yes, how?
I think over the short term, there are some things that we remain watchful of. I think where you have big-ticket consumption items, we would not be surprised if an extended period of softness or weakness extends itself. This could be in consumer discretionary items. This could be where there's a lot of cash-driven transactions, like consumer retail. But over the long term, the story remains intact. We expect from India a continued trajectory of growth over the long term as its middle class expands, and as its government reforms. Not all of these reforms would be smooth. The other challenge over last year has been the implementation of GST. Having the statute signed in was very important. It's something that the country has been trying to do for a really long time. But the key benefits will be extracted over the next 3-5 years, and it's in the details in the committees that form and govern the GST structures that most of the value would be extracted. So I think reforms, once in a while, you have some short-term pain, but for us, as you say, we are focused on the long term, and I think that trajectory remains attractive to us as long-term investors.
Okay, well, let me come straight away to the budget. Are there any specific expectation? What would you want or not want in the budget?
Well, the budget's always quite tricky in India. There are a lot of social issues to balance, as well as a lot of issues on fiscal discipline to sort out as well. And I think what we have expected over all these years is what we look for is consistency. What we look for is reasonable levels of consultation with business, with investors, and not too many surprises. Demonetisation was a surprise, but we can understand the reasons for an exercise like that being kept relatively quiet until it is to be done. In terms of the budget itself, as long as there are no negative surprises, quite a lot of reform can also be announced outside the budget season. So, we do pay attention to what the government tries to do. But that has to be over the course of, that's a continuous exercise. It's not something that we pay attention to just during budget season, but throughout the whole course of its term.
Of course. There is a widespread expectation that there should be personal tax cuts or corporate tax cuts or corporate tax cuts. Will any of these alter the way you pick shares and how much of it you will buy?
I think the corporate tax cuts was an idea that was mooted some years back, and I think that it has come from the thinking that India needs to look at everything, not just corporate tax cuts, but in the way, for example, the different taxes and subsidies and taxes are implemented as well, and it can't look at these issues in isolation. Where India goes on corporate tax cuts has to do a lot also with where the region goes on corporate tax. And India is very aware that it needs to be competitive. It needs to achieve the social gains that it sets itself out to do. The government needs to do that. But ultimately, it needs to be competitive against other countries within the region as well. And I think although the long-term trajectory is driven by the need to be competitive, the pace, India has to decide on the pace of that development, and that's something that we will watch with some interest.
There was a direct tax department's circular on how to tax indirect transfer of assets in India. And some FIIs, foreign investors, complained it logically would lead to double or triple taxation of foreign investors. That circular has been held in abeyance just recently. Any comments on that?
Oh, we watch that space very closely. Just like corporate tax cuts, I think as foreign investors, we owe a duty of care to our investors to make sure that we invest in markets that are structured competitively. I think the fact that the circular was kept in abeyance for further study was very encouraging. It proves that the Indian authorities do listen to feedback and do consider and make sure that all interests are kept in balance. When the circular came out, there were still some unclear details on some of the implementation, finer points of implementation. So I think those are some things that need to be ironed out. But we welcome, this dialogue. We do have people within Aberdeen that pay attention to this, and it's something that we are watchful of to make sure that we know what we're doing for our investors are right.
Well, finally, I want to ask you about how emerging markets, and in particular India, will fare in terms of fund flows. What's your best guess in 2017? The latter part of 2016 saw considerable outflows from EMs in general and India in particular. How will at least the first half of 2017 fare?
I think sentiment is very much driven by international or global events. North America is something that's and what Trump means as in terms of economic policy is something that is foremost on people's minds. The actual impact is difficult to predict, but what he says or what he tweets does definitely impact sentiment in the global markets. The pace and the aggression of the Brexit exercise is also something that people pay attention to. It is often seen as an indicator of what Europe might do, although I'm not sure that's a fair surrogate. I suppose the German elections that are coming up is also another key issue. So we basically have, a lot of eyes when you're in emerging markets, a lot of sentiment is driven by what happens in the developed world, how protectionist their governments would be, or how successionist their governments would be.
Yeah.
And that's something that will continue to dominate. I'm afraid that's something that will continue to dominate sentiment in 2017. So we will expect that volatility. I think it's difficult to say that whether for the full year we'll see a net inflow or outflow into emerging market space. What we can do is we can just make sure that we pick companies and businesses that are smart and relatively resilient against this volatility and see it through the medium term.
That was Adrian Lim's key investment philosophy and expectations from the budget and from India in general. We take a break. We will come back with Caesar Maasry, who is the head portfolio strategy for emerging markets at Goldman Sachs International.